What's up, guys? Good afternoon, good evening. How are you guys doing today? Welcome back to another live stream. Live from Charlotte in North Carolina. I cannot see myself quite yet, but I think that you guys can hear me. There you go. Here I am. Welcome back to another live stream. Another roller coaster ride today, huh? How was you guys' trading session? Did you guys kill it? Green so far this week? Yes. I mean, you mean yourself or the trading sessions? Good, chilling. How are you, fam? Good. So, welcome back. Please let me know. Remember, I am going to be walking you guys through what is going to happen tomorrow with the retail sales report. And tomorrow we also have the producer price index. So if you guys have any questions, please let me know. And I will be going over the SPY and the stocks that you guys want me to go over. I guess that you must have a bunch of requests, the good old Nvidias of the worlds and the good old Metas of the worlds and Teslas of the worlds and Apples of the world. So please drop a comment down below and let me know what stocks do you want me to go over. So what happened today in the markets? Green day across the board. Today we had, in my opinion, this is up for debate. I think that we had a mediocre CPI data report because the core CPI, which is the most important metric that the Federal Reserve listens to, or let's say that pays attention to, came out hotter than expected, so I didn't like it. But we can make the case that we had some sort of mixed report because the core inflation came out worse than expected, but the headline inflation, let's say that showed some sort of improvement year over year. So a bull would argue that despite the fact that the core CPI came out worse than expected, we saw some sort of improvement, and I am quoting improvement, when it comes to the year-over-year reading. So we had a green day across the board, an absolute roller coaster. Russell 2000 went up today 1.87%. NASDAQ went up 2.14%. Dow Jones went up 1.06%. And the S&P 500, or the SPY, went up 1.68%. Crude oil got absolutely killed. I know that you guys like some oil stocks. You guys love Occidental Petroleum and Devon Energy and so forth. And wow, I don't know if this is a viable dip in the case of oil stocks. Crude oil closed the trading session at $71. Gold went down 0.45%. Silver went down 0.61%. And the 10-year Treasury yield, or TNX, went up a lot, 3.50%. We can make the case that it just bounced back up, mostly because it got killed in the most recent trading sessions. Tesla's got 7 cents. Okay. Before going over some stocks on the SPY, keep in mind that in the case of the retail sales report, both reports, retail sales and the producer price index, come out at 8:30 a.m. We might see these two reports creating some sort of volatility. Both reports aren't that important. The most important aspect over here is the price action that we are going to see after these two reports come out, because after those two reports come out, we just need to trade the technicals. So in the case of the retail sales, the bulls are expecting that report to show some sort of contraction in the economy, or some sort of contraction when it comes to that report. So the reading that is expected tomorrow is a negative 0.20% versus 0.6%, which was the previous reading. If that retail sales report happens to come out, let's say positive, showing a positive figure, maybe plus 0.10%, that is going to be bad news Federal Reserve-wise. In the case of the producer price index, that is another important inflation report that the Federal Reserve pays attention to. In the case of the PPI, we have two reports, just like the CPI. So we have a headline report and we have a core report. The core report is supposedly excludes both food and energy. out of the inflation equation, right? So in the case of the producer price index, the headline report, it is expected at 0.3%, an increase of 0.3% month over month. And in the case of the core producer price index, which in my opinion is arguably the most important metric that we're going to be keeping a close watch on tomorrow, is expected at 0.4%, or reflecting an increase of 0.4% month over month. Let's say, guys, that the producer price index tomorrow shows an increase month over month when it comes to the core PPI of 0.5%, 0.6%. Keep in mind that today we got a hotter than expected core CPI, so who knows? Maybe we can get a worse than expected core PPI tomorrow. If that is the case, and along with the producer price index, we get a hotter than expected retail sales report, as I just told you, maybe reflecting a positive reading of 0.1%, 0.2%. I think that is going to be very bad news for the markets, and that is going to put downwards pressure. That's my opinion. So we have to wait for those two reports to come out, and after that, I will be telling you guys, or I will be posting some information in my Discord channel about the levels that you need to keep a close watch on. So what happened in the case of the SPY? Remember, please drop a comment down below. Let me know what stocks did you want me to go over. I already have a request from Scott. I will go over Tesla, not a problem. Okay, in the case of the SPY, remember, we are no longer seeing over here an uptrend. So the SPY and the S&P 500 are guilty until proven innocent. Take a look at this detail. Today, the bulls pushed higher, and they failed right at the 200-day moving average. After they failed at that level, we saw a massive dump. They found support at $387, and then we saw a massive push to the upside that, in my opinion, was caused by some sort of gamma squeeze, 0 day to expiration into the closing bell rally. You guys know what I am talking about. And we had a very solid close in minor time frames at $392, but keep in mind that we closed below the 200-day moving average at $393. So what I am saying over here, guys, is that as of now, the SPY is in a downtrend, so we have to be very careful with going long the S&P 500 until and unless, in my opinion, the bulls can reconquer this 200-day moving average. So until the bulls can take out $393. So let's say that tomorrow they push the tape higher, maybe because we get a better than expected PPI and retail sales and so forth. You know what I'm talking about. If tomorrow we happen to see the SPY opening above $393 and starting to consolidate slightly above that level, that is a very good sign. That could be a sign that maybe the bulls are about to start to gather momentum. In order to fill two gaps, and I need to show you over here TradingView because I don't have the Anchor VWAP available on Thinkorswim. We have a very important level over here talking about the Anchor VWAP, or the year-to-date Anchor VWAP. So this is an Anchor VWAP that comes from the first trading session of the year, and I have this VWAP at $398. So in my opinion, if tomorrow we happen to see a massive rally because for whatever reason, because the retail sales report came out better than expected with the PPI or whatever, or for whatever reason, you guys get the point. If we happen to open the trading session above 393, watch out for a push to the upside up to this year-to-date Anchor VWAP at around $398. I think that $398 is going to be a tough spot for the bulls. This is a very well-defined area of supply rather than demand, so an important area of overhead resistance. So I might be thinking about shorting the tape at $398 if that gap happens to be filled right away tomorrow. Okay, but what happens if we happen to see a massive dump tomorrow after these two reports come out? I am going to be keeping a close watch on $381, which would imply that if we happen to see a test of 381 bucks. That implies that we got two very nasty reports, both the retail sales and the PPI. And if 381 happens to be taken out, watch out for the lows back from late December at around 376. We are seeing a lot of volatility, guys. We could be seeing huge pushes to the upside or huge drops because we are seeing very, let's say, very extraordinary moments, out of the ordinary moments as of now in the markets. So we have to be ready to deal with a lot of volatility, and that implies that you guys have to be very disciplined with your stop losses, because I know that you guys usually buy shorter term options, options that expire maybe the same day, the next day, 1 week out. So you have to be very disciplined when it comes to you guys' stops. Otherwise, you're running the risk of losing a lot of money. Okay, any other question about the SPY? Levels of support and resistance that you guys want me to go over? In the meantime, let me go ahead and take a look at Tesla. TSLA, what happened in the case of Tesla today? It went up 5% today. Good day for Tesla, $183. Keep in mind, the stock of this company is still in a major downtrend, below a downward sloping 200-day moving average, and the bulls happen to reconquer today this 100-day moving average. This is a good sign, technical wise, at $174. So they close at 183 bucks. So we have a next gap up to 196 bucks. This is a previous resistance back from early February, and this is also a previous resistance back from early December of last year. So what the bulls want to see over here, guys, would be a process of consolidation slightly above 180 bucks. 180 bucks is a previous resistance back from early December. And this is also a previous resistance back from late January. So if the bulls can consolidate slightly above 180 bucks, they are going to be consolidating slightly above two important areas, previous resistances, and at the same time, or above the 100-day moving average. So this is going to be critical, this area, or these two supports between 180 bucks, 180 bucks, and $176. A process of consolidation above that area might be a green light in order to grab Tesla calls, or if this support of 177 bucks happens to be taken out by the bears, watch out for another drop down to $166. Let me take a look at the market structure of Tesla. Do you guys know that this is a tool that I use on a daily basis? I use it in order to determine what the supply and demand of any stock is looking like. So basically, who's in control of the tape? Either buyers or sellers. In the case of Tesla, we have a very poor market structure, guys. Take a look at this. What you guys can see on top of this chart is the demand, so buyers, in other words. And at the bottom of the chart, you guys can see the supply, so the sellers. As of now, we have a collapsing demand. That implies that Tesla is running out of buyers. And we have some sort of descending supply, but that is slightly above the average. So we can make the case that from a market structure standpoint, sellers are in control of Tesla. That makes me believe that if this area of support between 180 and 176 bucks happens to be taken out by the bears, we could be shutting Tesla down to 166 bucks. This is not a good looking chart, so be careful here with TSLA. I have lost money all week on SPY. John says. SMH is asking me to go over SMH. Guys, this is not an easy market to be traded. Not an easy market at all. You guys have to be aware of that. And since you guys trade, let me pull up here once again the SPY. Since you guys are trading or you guys are trying to take day trades, for the most part, I can tell that because I am in the main chat with you. And I suppose that if you guys are applying tight stops, this is a very choppy market. Very difficult to take day trades over here. Extremely difficult. But if you guys are trading short-dated options, you're pretty much forced to apply very, very tight stops. So this is not an easy market. If you guys are getting stopped out left and right, I can tell you that is the general situation that most traders are dealing with as of now because of the choppiness of the market. This is not an easy tape, guys. Take a look at this tape. Very difficult tape. Yeah, we're seeing volatility, which happens to be the best friend of any trader. I closed very good trades today. I shot at Nvda. I got Nvda puts. They traded the First Republic Bank. But I'm telling you, I am not being that strict with my stops because this is a very choppy market. So I am trying to, how can I say that correctly? I'm trying to feel the heat. I'm trying to be able to put up with the heat. But this is not an easy market. Not at all. I have been trading for 5 years, guys. This is by a mile, by a long shot, the hottest market that I have traded ever. No problem. Very, very tough market to trade. Okay. Let me take a look at MO. Let me see. What is this? Okay. This would be Ultra. So a defensive stock. Are you guys trading an Ultra? For real? Okay. I'm surprised. This is not Nvidia or Tesla or Apple or whatever, which are the stocks that you guys love. I don't have anything against those stocks. In the case of Nvidia, it is in an uptrend. So, that's a good stock in order to trade. I don't like trading downtrends. And I know that you guys love taking trades with Google and Amazon. I have nothing against those companies, but those are shitty stocks, guys, to trade. Okay. In the case of Ultra, goes up today 0.13% and closes the trading session at $46.74. This chart doesn't say much. Ultra has been trading inside this some sort of horizontal channel for months. Since early December, it hasn't done much. It is trading above the 200-day moving average, trading above a semi-ascending 100-day moving average. This chart doesn't say much. This is not a volatile stock either. So I would be waiting for some sort of breakout from $47, which is an area in which Ultra has failed on multiple occasions, on 1, 2, 3, 4, 5 occasions. This could be a breakout trade from $47 up to, I don't know, let me pull up here. Let me see another chart. Okay, let's say that Ultra can take out, the bulls can take out $48. Maybe they could be feeling this next gap up to a former support at $50. This is a former support back from May of last year. Yeah, this could be a swing trade. This is not a stock that you guys are going to be taking a day trade with because this is a stock that moves, in slow motion. But yeah, this could be a swing trade from or breaking out from $48 and filling this gap up to $50. This chart doesn't say much. Actually, it's not it isn't an ugly looking chart, but it doesn't say much. The stock of this company hasn't done anything since like 3 months ago. RSI at 48 points. Ultra is neither oversold nor overbought. It could be going either way. Watch out for this 200-day moving average at $45. If the bears happen to take it out, this is going to be a bad sign. This could even be a short sign over here. Let me take a look at the market structure of Ultra. So, who's in control? Buyers or sellers? Let me take a, do I have this stock available here? I should. Ultra. I don't have. Yeah, Ultra. There you go. Ultra Group. Let me see. Okay, what is demand and supply looking like? As you guys can see, the market structure doesn't say much. We have some sort of declining demand, and the supply is starting to rise, and it is about to burst above the average, which happens to be this dotted line that you guys can see over here. So the market structure doesn't say much. 5 out of 10. Yeah, let's see if Ultra can burst above $47 over here. Coin support. Hey, I have a bunch of requests over here. Okay, Nvda. Yeah, I got puts of Nvda. I closed a successful day trade. Nvda. Okay, goes up today 4.78%, closes the trading session at $240.63. And mind you guys, I took this trade on Nvda because the SPY dropped below VWAP. Today it was around 1 p.m. or 1:30 p.m. I don't like shorting stocks with a rising 5-day moving average, which happens to be this this kind of dotted white line that you guys see over here. Nvidia is in a clear uptrend. We can see a rising 200-day moving average, upward sloping 100-day moving average. This is a very good looking chart. A bear would argue that that Nvidia is too far away from home base. When I say home base, I am talking about these two moving averages, 100-day and 200-day moving average. So we can make the case that it is a bit overextended, but we can make the case that buyers are in total control of Nvidia. So this is not the best stock in order to short. I don't like guessing tops, guys. When I am going to short an uptrending stock, I prefer to see an important level of support to be broken to the downside before grabbing puts. In the case of Nvidia is innocent until proven guilty. So this is not a stock I got puts today, but as I just told you, I got the puts that I backed because Nvidia took out VWAP. And the markets as a whole were dropping, and I knew that Nvidia was going to go lower because the SMH, the semiconductor ETF, was also dropping. So yeah, what can I tell you over here, guys? Most of you are going to be grabbing puts if Nvidia happens to make a test of 244 bucks. Once again, obviously this is a previous support back from March 9th, and this is the 52-week high. So most of you are very likely to be grabbing puts of Nvidia at around 244, 245 bucks. I might be doing the same, but I would be grabbing puts depending on the price action that I am seeing on both the S&P 500 or the SPY and the QQQ. If the indices are going higher, guys, I am not shorting this tape by any stretch of the imagination. Very good looking chart. And mind you, what about a long trade? What happens if Nvidia, which closed today the trading session at 240 bucks, happens to consolidate tomorrow slightly above 238 bucks? Previous resistance back from late February and also previous resistance back from mid-February. This could be a trade to the upside. Yeah, if Nvidia consolidates, let's say that Nvidia starts to close candles slightly above 239 bucks, let's say 15, 20 minutes, this could be a sign that the bulls are gathering momentum in order to fill this gap up to 244 bucks. This could be a 3% trade. Nothing to sneeze at. RSI at 60 points. This is a very good looking chart, in my opinion. So yeah, I got puts today, but I already told you guys why I got my puts. Take a look at the market structure of Nvidia. I haven't pulled it up today, but I guess that we are going to see that buyers are clearly in control of Nvidia. So let me see. What is supply and demand looking like? And take a look. The supply is falling, guys. And even though, or despite the fact that the demand is also falling, the demand is way above the supply, and the supply is below the average. So I can confirm from a market structure standpoint that buyers are still in control of Nvidia. So that's a plan on Nvidia tomorrow. I would rather see, by the way, because I just told you that I prefer shorting stocks when an important support is taken out. I would rather get inputs if 230 bucks happens to be taken out on good volume. I would rather take in the trade rather than guessing a top at 244 bucks. Okay, Apple. Absolutely. Let's go over Apple. Okay, let me see. Good old Apple. It got killed today. We got news, right? I think that they are freezing, hiding at many levels. And there was another news that I don't recall as of now. So that news put a bit of downwards pressure over Apple. Let me see if I can see. Yeah, Apple said to delay bonuses for some to October. Said, okay, so they are no longer paying bonuses. I guess that Timmy is very likely to get his bonuses, right? I'm thinking. Okay, Goes up today 1.41%, closed the trading session at 152 bucks. As long as the bulls remain above 150 bucks, they are basically gathering momentum in order to fill this gap up to 157 bucks. This is a previous resistance back from mid-February, also a previous resistance back from early February, and also a previous resistance back from late October of last year. So in my opinion, and taking into account that above 150 bucks, the bulls are trading above the 100-day moving average and the 200-day moving average, there's nothing wrong with this tape. We can see a semi-ascending 5-day moving average. So this is an easy trade, guys. If Apple takes out 150 bucks and good volume, we could be maybe grabbing puts down to 144 bucks or maybe 146 bucks, 146 bucks, which is a previous support back from March 10th. But if the bulls remain above 150 bucks and any test down to 150 bucks, and if we happen to confirm support over there, could be a trade to the upside, in my opinion. RSI on the 4-hour chart, 57 bucks. Apple is neither oversold nor overbought. And let me take a look at the market structure of Apple over here. Let me see. So who's in charge of this technical chart from a demand and supply standpoint? No, this is Apple Hospitality. No, that's not what I'm looking for, guys. Sorry. Let me see. Apple Incorporated. Okay, let me see. So we have an ascending demand, and we can also see an ascending supply that is above the average, but the demand is way higher relative to the supply. So I'm thinking that if we don't happen to see a big drop in the markets because the retail sales report and the producer price index came out way worse than expected and so forth, if Apple holds 150 bucks, we are likely to see 157 bucks, which in my opinion, I think that could be a short. Even though I don't like guessing tops, but I might be willing to grab some Apple puts near 157 bucks, approximately. Okay, dividend stock, yeah, they pay a very, very good dividend. Ultra, I agree on that, absolutely. And it is a defensive stock, guys. If you want to kind of set up some sort of swing trade, let's say for 1 or 2 or 3 or 4 months, and if you guys believe that a recession is coming to the U.S. and stuff like that, and if you also believe that we are going to see a rotation into the most defensive sectors, utilities, consumer staples, what else? Healthcare, then Ultra could be, yeah, that could be a legit trade, a legit, let's say, defensive trade. Coin support. Let me take a look at Coinbase. By the way, Bitcoin has been going on a tear. Coinbase went up today almost 6% and closed the trading session at $62.65. $67 could be a potential supply area. I wouldn't grab puts over there. Again, I don't like guessing tops. I just told you. But at 67 bucks, I guess that many of you are likely to grab puts. $67.50-ish is a previous resistance back from mid-March and also back from early March. That could be a potential area from which Coinbase could be pulling back. And the bulls are trading as of now above this 100-day moving average, and they are also trading. They are actually holding as of now, guys, an important support over here with a convergence of this downward sloping 200-day moving average and the 5-day moving average. So watch out for Coinbase tomorrow if the stock of this company happens to consolidate slightly above this downward sloping 200-day moving average, so slightly above $61, $60.50. That could be a sign that the bulls are gathering momentum. Sorry, guys. I have been live streaming throughout, the whole day since 9 a.m. I'm a bit tired here, so sorry about that. Okay, so if the bulls consolidate slightly above 61 bucks, that could be a sign that they are about to make another push to the upside and maybe fill this gap up to $67-ish, which I think that is an important area of supply rather than demand. RSI at 53 points. This is another good sign for Coinbase. It is neither oversold nor overbought. And mind you, in my case, and since I just told you that for the most part, I don't like guessing tops, I would be a buyer of puts if this 200-day moving average that coincides with this 5-day moving average would be taken out on good volume. So 59 bucks happens to be taken out. We have a gap down to 53 bucks. That might be the short that I would take in rather than grabbing puts at 67 bucks. Let me take a look at the supply and demand of Coinbase. Okay, let me see. We are 30 minutes in. Okay, let me see Coinbase. What is going on in the case of Coinbase? Buyers and sellers. And take a look, guys. From a market structure standpoint, this is a short. We have a semi-collapsing demand, or we have a descending demand, and we have an ascending supply that is about to burst above the average. So we can make the case that sellers are starting to gain control from a market structure standpoint. So either taking out 59 bucks, I think that could be a short, or maybe failing, or clearly failing at $67 per share. There you go. Can you check GSAT? Absolutely. I don't know that stock, but let's go ahead and take a look. GSAT. Let me have a sip of Sprite over here, guys. Next time I am going to, for the next live stream, I am going to grab a beer. I promise. Okay. So this is a penny stock. I don't deal with penny stocks at all. It went up today 1.77%, closed the trading session at $1.15. I have nothing constructive to say over here, mainly because this is a penny stock. This is a stock that trades below $5 per share. That implies that most of the, let's say, identifiable areas of support and resistance don't act as such, because most of these penny stocks trade on very low volume. Major downtrend below a downward sloping 100-day moving average, downward sloping or semi-downward sloping 200-day moving average. So I wouldn't do anything here. Do you have a position on GSAT? I hope you don't have. I hope for you that you don't have any position in this penny stock. And if that is the case, just stay away from these kind of garbage stocks, please. Okay. What do you think about Triple Q? Yeah, sure. Let me take a look at Triple Q. Okay. So, great day for the Triple Q. In the case of the Triple Q, guys, we have a different situation relative to the SPY. And why? Well, because the bulls are trading above the downward sloping or semi-downward sloping 200-day moving average, and they are trading above a semi-ascending 100-day moving average. So this is a sign that the bulls are starting to gain control of the Triple Q, or the NASDAQ 100. We have a next gap up to 303 bucks. Maybe this is a gap that the bulls could be filling tomorrow if we happen to get a push to the upside based on the retail sales and the producer price index. If the bulls can take out 303 bucks, maybe we could be seeing 310 bucks coming up. And the main line of defense is going to be 290 bucks. 200-day moving average. This is a very important spot for the bulls. The Triple Q should be trading, I would say, within this range in the upcoming trading sessions. A drop down to $290. And if that area happens to act as a support, that could be a viable dip unless the markets as a whole are falling apart. I would be a buyer of the Triple Q at around $290. And if this gap up to 304 bucks happens to be filled tomorrow, this is an important area of supply. So the Triple Q could be pulling back at 303 bucks or near this area, 303 bucks, 304 bucks approximately. Okay, there you go, Jose. I already told you the areas of support and resistance. Jermaine Smith, I already told you about GSAT. Goldman Sachs. Damian Torres. Let me take a look at Goldman. I haven't taken a look at Goldman in quite a long time. You guys know that banks are getting killed. You know, you guys all know. You all know this Silicon Valley Bank fiasco. So keep in mind that in the upcoming trading sessions, and since we have a lot of concern about the about the banks in general terms, you need to keep a close watch on XLF. If you guys are trading the SPY, guys, I am begging you, please put XLF on your grid. The financial sector. This is a very heavy sector inside the S&P 500. So this is a very important sector inside the SPY. So if you are grabbing puts or calls, or if you're grabbing, or if you grabbed calls of the SPY and the financial sector, or let me rephrase that, if you're about to grab calls of the SPY and XLF or the financial sector is pulling back, then that's a very bad sign for you to go long the SPY. On the flip side, if you are about to grab puts of the SPY and the financial sector is pulling up, then that's a bad sign in order to short the SPY or the S&P 500. Please keep that in mind. This is a very important sector, market cap-wise inside the S&P 500. Okay, let me take a look at Goldman. What is going on over here? Okay, as I just told you, went up today 2.10%, closed the trading session at $322.15. Very ugly looking chart. I wouldn't trade Goldman over here. This is a major downtrend. We have a declining 5-day moving average. Goldman is trading below the 200-day moving average, below the 100-day moving average. So sellers are in absolute control of the stock of this bank. And I would need to see buyers stepping in and regaining control of the technical chart of Goldman Sachs by taking out this 200-day moving average at $338. I wouldn't touch this stock below $338. And mind you, this could be a short. If Goldman fails at $338, which, by the way, happens to be a previous support back from late January. And this is also, by the way, a previous resistance back from July of last year, late July of last year. This could be a short. So watch out for $338. And I am not going to suggest to you guys going long over here because I wouldn't do it either. Okay, very ugly looking chart. Goldman is guilty until proven innocent. So I wouldn't go long below $338 and I would short it if the bulls happen to fail at $338. Let me take a look at the market structure of Goldman. Let me see. Goldman Sachs. There you go. Okay. Yeah, the market structure doesn't say much. Even though we have a declining, or I would say collapsing demand, as you guys can see over here, the blue shaded region on the top of this chart is the demand, and you guys can see that the demand is collapsing. It is kind of, picking back up, or it tried to pick back up yesterday, and the supply is below the average and falling as well. So we cannot make any case. In the case of Goldman, by taking a look at the market structure, but I would stay away from it, at least from a long perspective, below $338. Okay, anytime, Jose, absolutely. Will XOM reach 115? Yeah, oil got killed today. Let me take a look at XOM over here. Okay. It is still trading above an upward sloping 200-day moving average. This is a good sign. But it's below a 100-day moving average or the 100-day moving average. I don't know, guys. Oil is getting killed. And today we had a very weird phenomenon in which oil got killed on recession concerns. And why do I say that? Because the Dixie got killed as well. The Dixie dropped a lot today. Let me see. So the Dixie went down today. Not a lot. It is actually going higher after hours, but it closed the trading session in negative territory. So we had a day in which the Dixie went lower, and you guys know that commodities and oil obviously is inversely correlated to the US dollar, but that didn't help oil because we have recession concerns, because the Fed is going to break something, and because, the Fed is going to keep on hiking rates and so forth. So in the case of Exxon, I would rather seeing it taking out $110 before touching it in order to go long. And if I draw a line over here, guys, let me see, $110. Yeah, take a look. This is an important level. So we have the 100-day moving average coinciding with a previous resistance back from late December. So RSI at 39 points, a bit low. If we happen to see the oil climbing back up, this is very important, guys. You cannot go long any oil stocks without taking a look at oil, or at least the Brent or the West Texas Intermediate. So Exxon takes out 110 bucks with oil going back up. We could be taking a momentum trade from 110 bucks up to 114 bucks. 115 bucks, I would say. This is a previous resistance back from early March. This could be some sort of 4% trade. Be careful here, guys, because oil isn't looking good at all. So let me take a look at the market structure of XOM. Okay, let me see. Wow, 40 minutes, guys. I am about to wrap it up. Please let me know if you have any other request. Okay. Yeah, the market structure doesn't say much. We have the supply going lower and actually staying below the average. And the demand happens to, it is kind of starting to show some sign of life, some signs of life. Take a look at how it is climbing back up since March 1st. So buyers are starting to show up in the case of XOM from a market structure standpoint, but I would need a confirmation before going long. So I need to see Exxon taking out 110 bucks. Yeah, thinking of taking a long here. Yeah, but please, bursting above 110 bucks. Not a good looking short as of now. Okay. There you go. What side was that then? Yeah, this is a side that I use on a daily basis. As I just told you guys, market structure edge. I need to pay for this side. It isn't cheap, but it helps me to kind of define who's in control of any short from a demand and supply standpoint. So this is a tool that I use a lot. Very useful. It helps me when I see what we want to see. For instance, before going long any stock, we want to see a rise in demand and a fall in supply. So before I take any trade, guys, I check on market structure. If I want to go long any stock and I have a fall in demand and a rise in supply, I simply don't go long. That implies that we have more sellers than buyers out there. So that's not a good sign in order to go long. Okay, I am talking about AMR. Okay, let me take a look at AMR. All right, let me see. AMR, what is this? I don't know. Maybe I can wrap it up here. Alpha Metallurgical, let me see, resources. Okay, goes up AMR. Okay, Alpha goes up today 1.86%, closed the trading session at $162.77. So the bulls were rejected near $180. This is a previous resistance back from late November of last year. We have a declining 5-day moving average, which is not a good sign. But the bulls are trying to hold this upward sloping 100-day moving average at 161 bucks. If I draw a line over here, 161 bucks happens to coincide, or this 100-day move, this upward sloping 100-day moving average happens to coincide with a previous resistance back from October of last year. So if the bulls can hold this moving average at around 161 bucks, this could be a sign that they are about to gather momentum in order to make another push higher and maybe fill this next gap up to 173 bucks, which is a previous resistance back from August of last year, and it is also a previous resistance back from late January of last year. This is an interesting chart, guys. The stock of this company is in an uptrend. We have an upward slope into 100-day moving average. So as long as the support of 160 bucks holds, this could be a trade to the upside. Yep. From 160 bucks up to 173 bucks. We are talking about an 8% profit trade. I am going to put this stock on a sticky note. I am going to put it on my watch list for tomorrow's trading session for sure. Our side 41 points. Healthy from a technical standpoint. The stock of this company is neither oversold nor overbought. Let me take a look at the market structure of AMR. Alpha Metallurgical. There you go. So we have some sort of descending demand, as you guys can see over here, the blue shaded region. However, take a look at how the supply is collapsing. It is already below the average. And despite the fact that the demand is starting to drop, it is way above the supply. So this is a good sign. This might be signaling that the bulls are going to be able to successfully hold this 100-day moving average and maybe fill this gap up to 174 bucks. So thank you very much for this suggestion. I am going to do, that's what you said last week, though. Don't lose your stick. Here you go. So I went over this stock last week. Dude, I have been so busy. But take a look. I am going to put it down right away on a sticky note. And I guarantee you that this stock is going to be on my watch list tomorrow, AMR. There you go. Yeah. I'm getting old, guys. I'm starting to forget stuff. There you go. Thank you. There you go. Here's the proof. AMR on a sticky note. Thanks, buddy. Hey, did you trade this stock? As I told you last week? Let me see. Let me pull up a 5-day, 5-minute. Now it dropped, right? Yeah. It dropped, but it held this 100-day moving average. Okay. Good. Alrighty, guys. So I am going to wrap it up. I'm tired. I have been live streaming since today we got the CPI data report. Guys, I started to live stream today at 8:15 a.m. throughout the whole trading session. I'm done, guys. I need to get a beer, and not only one beer, like 3 or 4 beers, relax a little. So thank you very much for coming over, for joining me, and see you guys tomorrow on Discord. I mean, I will be hanging out with you guys later on today on Discord. So thank you very much, guys. Go get a beer. Tomorrow we are very likely to have another crazy day. Bye, guys. Take care. 47 minutes in. My goodness. Bye. Take care. Bye.